Hey everyone, welcome to another episode of The Virtual Investor here. It's Paul and Mike, and today we're going to go over something that's been requested a lot by a lot of our students, by a lot of people on our YouTube channel, and it is about private lending. So we're going to roll into it here. Mike's going to go into detail. We got a little slide deck, and we're just going to see. I think Mike has some questions that people have brought up here, and then we'll kind of break them down and go through them individually here.
All right, sounds good, Paul. Let's basically this video is going to be a series of commonly asked questions essentially on what private lending, and the way we kind of ordered it will kind of flow nicely into kind of describing what it is, and then kind of the details, who people are and things like that. So let's cover the first question here on what is private lending. And essentially it's a person or an individual versus an institution in its simplest form, if you want to think of it that way. And private lending, to me, my definition, right, it serves kind of like as an alternative to traditional institutional bank financing for lending on real estate. So most people think of lending for a real estate property. You think about going to a regional bank. You might know the banker Joe down the street type of thing, and you kind of go through that long application process. There's an appraisal. The problems with those properties, if you're an investor and you're looking to do an add value, where you want to buy, renovate, and refinance and rental out, or just flip it at the end of the day after the rehab, most of those kind of regional banks, that's not an asset they really want. They want something that's already nice and in livable standards. So what alternatives do we have as a real estate investors? One is our own funds, right? But you can only scale so fast and so far using your own funds, and unless you're like a billionaire. But and it's also not the best use of your capital to use all your funds on your own deals either. And another common way me and Paul do it is through these individual or private lenders, basically. So it's a really good tool for real estate investors to utilize. Now, we'll kind of cover more videos later, but Paul, you wanted to more questions later, but anything else on kind of like the initial definition on what private lending is?
Yeah, I'm going to kind of break it down a little bit differently too. You were talking about like your traditional finance, going to the bank, getting an appraisal, giving them your tax returns, giving them your financial, pardon me, your financial statements, bank statements, all those things. And then there's the asset-based lending, which is like Kiavi, Lending One, Lima, which you don't have to give as much financials, but you have to show history in. And then there's a third most important, the one Mike and I like to use the most, and we like it best because of the flexibility: private lending, where we're borrowing from other individuals, people who want to get a good return on their money and not get 2-3% in the bank. They actually want to get 7 to 10% on return on their money and have it in something that's fairly safe. They don't really necessarily want it in the stock market all the time, or at least a portion of it. So these individuals are the people that are willing to invest, and they're everywhere. We're going to get into that. They're in your network, or your friends, family, potentially friends of family, all those kind of things.
Yeah.